Hello, good afternoon, my neighbors. How y'all doing? I hope you had a great day so far and you did well this week. Welcome to Mindset, and I want you to take the time and just go ahead and hit the like and subscribe and the bell button down below because I always drop some gems so that way we can make sure you get right back to zero and become a better trader. All right, so let's go ahead and get this going. All right, midweek mindset reset. Wednesday wisdom for weekend wins to refuel your fire and reignite your passion. All right. So this week was very interesting, right? Because we had quite a bit of information that was coming in, some in the morning, some in the daytime. But the main one that's probably the most critical was the one today. You could kind of see in the market, we was like really just consolidating, and you had to restrain yourself. I took a couple of trades and it fit my setup, but for some reason it just did not pan out. So I had to understand that the market is in a holding pattern. So I was able to kind of wait for the Fed decision. So let me just go ahead and get really into it. So let's try to understand the psychology of the decision, right? So the Fed rate decision was to kind of like break down for every individual what the federal government will do in the future. There was some consensus that he was going to hold his position. He's already gave us warnings, letting us know we're going to be holding at a high level for a long period of time. But the market was still on their pins and needles because they don't know whether to invest, because if the interest rates are continuing to rise, then they're going to have to try to keep some of the cash in their pocket and probably put in some safer things like your bonds and something that yields more on the benefit of those higher rates. And if it was a cut, then that means there's going to be more cash flow. There's going to be something more streaming that allows for people to start investing back into these companies because the companies has more cash for them to actually invest. Now, understand, having more cash to invest is a whole nother thing, but it's just the cost of getting cash because we operate in a very leveraged type of economy. So if the cost of getting money or cash flow is high, then it's going to kind of like slow down the economy, which was their whole entire purpose. So why is this important? Well, this is important so that way we can try to temper down inflation. At least that's one of their tools to do so. So what does it do to our mindset as traders when you have something like this decision? Well, you could see today was a holding. It wasn't, hey, I'm going to go long. If you went long, you probably would have got eaten up a little bit, or you probably would have had to be successful with some small margins, and then vice versa. So it really affects our mindset, and we got to be able to kind of like hold on tight because we got to be able to make the sound decision because we have a responsibility to our portfolio as our own personal hedge fund managers. All right. So I'm going to leave you with this quote. This is Myron Golden. You do not decide your future. You decide your habits, and your habits decide your futures. So if you have a habit on seeing the market really was not panning out, you can't get the percentages that you were expecting, and they were holding the market in one level where we just pretty much ranged, and that is not your style, then you're going to create a habit of always taking trades in the most inclement surrounding that doesn't help your portfolio. So it's very important that you understand you gotta reel in your mindset so that way you don't get into trades that you're uncomfortable with. All right, let's go to the next part. The next part is the market impact. How does this impact the market? Well, long term, if they keep on holding the interest rates where they are right now, the market is just going to naturally, hold its position or continue to the upside based on current climates and current conditions. But the market's impact right now is every time that the Fed's decision is going to be announced, they're anticipating that there's going to be some type of price cut. As traders, ask yourself this question: what if the price cuts never come? What if they just say, you know what, we stayed at zero low interest rates for so long after the housing bubble, maybe we'll just continue holding these rates for 2 years, 3 years, 5 years, whatever the case, because the Fed has control on how they're going to do their monetary policy. And I don't know if anybody really lived through the housing bubble, but that first impact was detrimental. The market was at a standstill, so they had to jump it up. So they had to put the stimulus in play. But what type of mindset was in place at that time? That means there's cash. Those that are business savvy, they're, I could gain cash flow, or I could borrow cash a little bit easier so I can leverage myself, put myself in a position on different business opportunities. But in this case, with the market, we're stuck at this 5.5%. That this could be something that they just say, you know what, let's just really temper down the economy. Let's just put it in a better place so that way they don't get used to always having that free cash flow like that. So look at it from a bond perspective. With these interest rates, people are putting their money inside of bonds because the bonds are actually yielding certain results that they can actually guarantee that it's going to be paying out. And these are the things that affects the market, and that's why the stock market has kind of been a little bit volatile, where it's going up and down, especially if the yield curve starts to go up again. Yeah, you're going to see a lot of people probably go into that as well. So that can have a very, very important impact in that result. So let's go ahead and get into the next part. So what do we do, right? After the Fed decision release, we got to find a way to avoid FOMO. If you see the impact of when they found out that there will be no price cut, there will be no price raise, right? And I don't think that he's going to actually raise the interest rate anytime soon. At this point, I think with the CPI data starting to get a little bit lighter and everything else, and it looks like inflation is a little bit in control, the last thing they need to do is just get it to their threshold, what they're looking for. And everybody knows they're trying to get back to 2% inflation rate. But avoiding FOMO in that regard, when the market finally makes that decision and all those orders come flushing in and driving in and start pouring in, you don't want to just go ahead and race into the position. Is that going to fit your strategy? Is it a breakout strategy? Those are the things you got to kind of ask yourself before you jump into the trade. And that's the ones that's going to be really, really key, because FOMO is probably the most detrimental thing in your portfolio. The psychology is, oh my God, price in this regard. Price was going up so fast. There was so many opportunities to take it to the upside, right? And the first thing that could have happened if you jumped in too fast, it could have easily ate up your portfolio, because the impact where you're getting in might be something that someone else is getting out. So you have to operate in your strategy. Strategies of avoiding FOMO. Focus on the long term. Yes, today was Fed decision, but did you already do your analysis for the results? Are you in the right position? And if you were going to the decision, then you should have made the decision before the Fed decision, right? Because the Fed decision is letting you know, hey, we're going to stay here. But all the other fundamental things and technical aspects should have been already in place, and you should have been already in your position maybe an hour before, 2 hours before, the day before, whatever the case may be. Those are the things that you have to look at. And if you look, avoiding emotional trading is probably the most important thing. And let me just emphasize, if you know that you're emotional, be like, I shoulda, coulda, woulda, and you're mad and you're clicking the button, I'm telling you this right now, your portfolio is suffering right now, and that's okay. Now you got to be able to harness that energy and say, you know what, I'm okay with missing out on this opportunity until the next one sets up that fits my strategy. And then the last one is sticking with a disciplined trading plan. Those things are the ones that's going to make you avoid that FOMO. Tom Hugard quote is, the market is a device for transferring money from the impatient to the impatient, from the impatient to the patient. So those that were patient to wait for the Fed decision were already in their positions a long time ago. So now all those that had FOMO were the ones that's piling in. And then when we have retracement, those that were already in are cashing out, either scaling out of their position, they're allowing for runners, or they're the ones that's leaving you holding the bag in this big game of hot potato. So are you the one that's going to go ahead and keep that? All right, let's go ahead and get to the next one. Adapted to the rate change. So right now there is no rate change, which is a good thing, right? Everything is staying static. It is exactly what it is. So whatever your trading plan or trade strategy for the long term was, we're back to it. There's nothing that you have to really adjust. If it was, here's a cut, it would probably shot up and you got to make a decision. Am I okay with the profits I have so I can take something out? Or am I going to go ahead and continue to hold it? Those are the things that you have to make those decisions. So adapting to the rate changes is very, very key, so that way you don't make some rash decisions. Now, the first hour after the rates changed, I kind of sat back. I was like, let me just see what the market's dissection is going to be. And I wanted to see their psychology, which I'm going to go ahead and break down a little bit further in this presentation. And what I realized was we were literally astronomically out. Like we just shot completely out. And then I just started monitoring it from lower time frames. I didn't go too deep. I went to like about the 30-minute, and I was just analyzing what is it that they're trying to tell me? What are they thinking? And even though it's creating imbalances all over the place, the first thing I realized was these people are expecting that this was going to go up. So I waited an hour before I actually made any decision. Now, you might come up with a strategy for these rate changes. Maybe it's wait 15 minutes, back test it, study it. That's how you adapt to these changes. This, also risk management. Maybe your strategy when there's no Fed decision is 1% of your portfolio, while when it's a normal climate, it's probably 2 or 3% of your portfolio. Those are the things that's going to allow you to adapt to these rate changes, so that way you don't feel like you got to keep on changing strategies all over the place. Manage your risk, make sure your diversifications are in place, and always stay informed. Like he had his speech right after at 2:30. Did you know to be prepared for that? Because he could have said something that was opposite or contrary to the Fed decision. These are the things that you have to make those adjustments with. All right. So that's how you adapt to rate changes. Let's go to the next one. Your role in with the market response. You have a very, very critical role. When I say very critical, it's very important in your role, because as a player in the market and being, like I said last week, you are the greatest trader in the world. You have a responsibility to be accurate in your entries. That way you're at support. So when they're making their orders and filling those orders, and they're getting that support or getting that resistance, that you're in tune with the market. That is your most important role, because it allows for you not only to protect your portfolio, but it also is part of the climate in itself, and you work in unison with the market. Listen, I know some of you probably saw that green candle. It was just way too high, way too fast. And your first response is, when I see this, I'm going to take some puts, or I'm going to short the market. And you probably got your face ripped off. This is why FOMO is very important. This is why a strategy, back testing, and everything else is very important. You got to be able to handle those things, because every time you take a trade, you're applying a certain stress level to the market, and depending on the direction of the market, it's either going to add stress to you, or it's going to add stress to the direction and add to your portfolio. So that's very important in your role inside of that market. So don't worry about information and misinformation and everything else. Read the news for yourself. Or if you're a technical trader like me, I'm looking at the candlesticks and discerning what the news can be, and then using the news as a confluence in that regard. So you have to respond timely. You have to know when they were going to release those minutes. Because imagine you actually took a trade a little bit before 2 o'clock, because that's when the news happened, and you was like, oh, this is my setup and I'm in. But you didn't know that at the end of the day the news is coming up, and we already talked about this. The first responsibility you have to be aware of your market climates, and today was very, very key on that. And then out of nowhere, you was in some shorts, because it was starting to kind of short a little bit. It got under on NQ. We got under the 16,000. You probably was starting at 16,006, and then you started shorting the market, and you probably was maybe 20% in profit, 30% in profit. I'm gonna hold on to this a little bit longer. And as soon as the news dropped, boom, it spiked up, and it probably liquidated your account, or it actually cost you money when it was all said and done. These are the problems that you have if you are not ready for the market climate. So as I'm going into this and I'm explaining, you got to know the news. You got to be timely. Your role is accurate information and understanding. And I hope by the end of this video, you actually have an understanding of how these interest rate changes affect. I want you to have a complete strategy. And if your strategy is, I'd rather just sit out the market and just wait till everything happen, kind of similar to me, like I sat out for an hour, have at it. But just make sure your strategy is sound and key. And the first priority is protect your portfolio as your personal hedge fund manager. All right. This one I'm going to be quick with. Need of mindset resilience. We've covered mindset resilience. What if you took a trade, or the example I just was saying a little bit earlier? You took a trade before the market even got the information, and as soon as the trade happened, you just realized I had 20%, and that 20% has turned into negative 30%. That's a lot for you to take on. And then the other part of it, you didn't actually look at the news to know that 2 o'clock there was going to be a major critical red folder for my FX folks type of decision that was going to be made. And you're beating yourself up right now. Listen, you will not be the greatest trader in the world if you didn't actually make mistakes, because you have to learn from the mistakes. If you are that person, I'm telling you this right now, this was the day for you to really journal. I know that Fed decision happens. I'm going to make sure I check out my FX book or my Financial Juice or my Forex Factory, whatever it is that you're using to get the news. I got to make sure I put it on a calendar, put it on a sticky note on my monitor, whatever it needs for you to remember, hey, by this time, I need to be out of my trade. Because that's what I did. I actually shorted the market towards the 2 o'clock, and then I saw a little bit of a foundation, and I actually took some calls. I could have been the one that actually said, oh, at this calls, I'm going to hold on to it. And I could have been like 100 or 200% on my calls. I did not want to carry anything over 2 o'clock. Why is that? Because I know me. I know my trader's identity. I am a scalper. I scalped it. Now that everything's set, I'm going to let the dust settle and I'm going to scalp again. I am not trying to swing over the news. I am not a gambler. I do not treat the market like a casino. And these are the things that help me with my market resilience. My mindset resilience. So it's very important that you almost like you want to kind of apologize to yourself and also forgive yourself at the same time if you were on the wrong end of the stick. If you were on the right end of the stick, I still want you to apologize to yourself and also forgive yourself, because you kind of gambled in the market if it wasn't part of your strategy. Because if it's part of your strategy, a strategy has a stop loss, has a take profit, has an entry, and has a reason why you're in the trade. Though if it doesn't have any of those things, then that means you were gambling. Let's go ahead and listen to Myron Golden's quote. Your mindset is the most important factor in your success. A positive, growth orientated mindset is the best investment you can make. Listen, if there's any time that you're going to end up being a trader, I'm telling you this right now, the first thing you have to remember to yourself is that you are investing in some way, fashion, or form. It might be for 5 minutes, like me as a scalper, or it might be for 10 hours, 10 days, 10 years, a whole entire lifetime. Either way, you're an investor. And because you are your own personal hedge fund manager, you owe yourself to be the greatest trader that you've ever been in your life. So make sure you have your mindset resilience built. All right. And let's go ahead and start to wrap it up. We're going to talk about the practical tools for mindfulness in trading. I always bring this up. It's very useful. I know I kind of regurgitated, but let's start from the beginning. Self-awareness and emotional check-ins. You got to do that. If you are in a pretty much low right now, check in. Log out of your account. Don't take another trade. Figure out what it is that's actually affecting you. Find a way to go ahead and get yourself back to zero, because the goal is to be objective in the market and move on. We are traders. We only impact the market when we are successful. Steve Jobs once says intuition is a very powerful thing, more powerful than intellect, in my opinion. That's had a big impact on my work. So make sure you are in sync with yourself so your intuition can come into play and you can make your objective very positive for your portfolio. All right. Journaling and reflective analysis. Very important. If you were affected in this market or you took really good profits, journal it. Know how it feels. Know what you're going to do next month when the next Fed decision comes into play as far as the interest rate. So that way you know how to react to it and what to expect. Setting boundaries and limits. I gave myself the biggest boundary. I told myself, listen, 2 o'clock's coming. Get ready to close your trade. After 2 o'clock, let's let it settle for about an hour. Then we're going to trade again. These are my boundaries and limits. Yours might be different, but make sure you set them. Educate yourself on market climates. Listen, this whole entire situation and video was on educate yourself on market climate, and we just use the example of the Fed decision. I hope you understand that. All right, and then scenario planning. That's your strategy. Remember, I gave you the W's. Why are you looking in the first place? What is your entry, and when are you going to get out? Because at the end of the day, you're not going to sit there and stay in the rain when it's raining. You're going to get inside your house, so you got to know when to get out of the rain. Okay, all right. Diversification and portfolio rebalancing. If you made money in the market today, take something out. I gave y'all my percentages. Take 50% of it, put it in something long term. Take 25%, to put it in something to reinvest, so that way you can take some high risk trades, because you are the greatest trader. So we're going to capitalize and compound. And then the last 25%, go ahead, take care of yourself. Buy yourself a handbag if you're a woman. Take your girl out to eat if you're a guy. Take that 25% and feel like you gave yourself something, because you are the greatest trader in the world. All right. And then the last one is mindfulness and meditation. Very important. Get yourself back to zero by calming your nerves, calming yourself, and getting yourself back to zero. And I appreciate every one of you. In conclusion, as I wrap this up, very, very key thing. I don't know how many ways I can say this as far as FOMO. FOMO is probably the most dangerous thing that can ever happen. I try to replace it. I think I've done a couple of sessions on JOMO. I don't know if you caught that. It's in my videos. Actually, you know what? I take that back. I want to say it was during my mindset participations on Saturdays. We really enjoy the JOMO. People were posting profits, and we was dancing in my community. We was having fun. We was like, congratulations, fire emojis, muscle emojis, thumbs up emojis. Those are the things. Have joy on other people's success, because when it's your success, because you're the greatest trader, you want others to have the same type of energy for your success. All right, so tip it forward. Have fun. If you haven't liked and subscribed the video, by all means, take the time and go ahead and do that right now. And also, if you don't have a community, I'm telling you this right now, Cheat Code is great. I run a futures floor. We do it on Tuesdays and Thursdays from 8 a.m. to 1:30. We have fun. We make money. We learn. We cry together if it goes wrong. We've blown accounts. We've funded accounts. We've done everything, because at the end of the day, we all are the greatest trader in the world. So I'll see you there. Yeah, have a great day.